Okay, dear student, this is Abil Ahmed from Abil School of Accountancy, your taxation tutor. In today's video, we'll be solving Finance Act 2023 Specimen Section A. Let's start. Question 1. What amount of Class 4 NIC contribution will William pay for the tax year 23-24? Obviously, you need to know the limits of Class 4 NIC. 12,570, it is actually 0%. Then 50,270 minus 12,570. Then it is 9%. If your tax adjusted trading profit after deducting the brought forward trading loss is more than 50,270. If it is more than 50,270, then over and above 50,271 plus above, then there is no limit. It is 2%. And these all Class 4 NIC limits will be given to you in exam. Class 4 NIC is applicable on tax adjusted trading profit after deducting the brought forward trading loss. Now let's attempt this question. William is self-employed and his tax adjusted trading profit for the year ended 5th April 2024 is 82,700. During the tax year 23-24, William contributed 5,400 gross into PPC. Basically, gross personal pension contribution has no link with the Class 4 NIC payment, number one. Plus, gross contribution payment has no link with the tax adjusted trading profit. Basically, whatever gross PPC payment you have made, it will not be deducted from the trading profit. What gross PPC does, it actually increases your basic and high rate band limits. It reduces your adjusted net income, but it has nothing to do with your tax adjusted trading profit. So let's simply calculate Class 4 NIC on 82,700. It means 12,570, it will be 0%, which is 0. 50,270 minus 12,570, then we'll be having a 9%. So let me quickly use a calculator. 50,270 minus 12570 into 9%, I'm getting 3,393. Then 82,700 minus 50,270 into 2%. So 82,700 minus 50,270, then 2%. I'm getting 648.6. So make it 649. So the total is 4,042. So your answer is choice B. Okay, now you are a trainee chartered certified accountant and your firm has a client who has refused to disclose a chargeable gain to HMRC. From ethical viewpoint, which two of the following actions could be expected from your firm? Number one, obviously reporting under the money laundering regulation. This could be a money laundering issue. Another thing is advising the client to make, we will advise our client to make the disclosure. Okay. Informing HMRC, no, actually we are not going to inform HMRC for this non-disclosure. Why would we do that? We are going to just advise the client, and let's say client is still not listening to us, then we will leave this client. And we are not going to give any reason to HMRC. We will inform HMRC that we are no more consultant to this client, but we are not going to give reason to HMRC. Warning the client that your firm will be reported. No, why would we will just advise, nothing else. So the answer of question 2 is 1 and 2. Now let's go for question 3. What amount of personal allowance will Martin be entitled for the tax year 23-24. Basically, if adjusted net income exceeds 1 lakh, then personal allowance reduces. How do we calculate adjusted net income? Simply, you will take net income minus gross PPC minus gross gifted donation. If your final answer is more than 100,000, then your personal allowance will reduce. In fact, if your adjusted net income is 1,25,140, then personal allowance becomes 0. Let's apply here. Martin is self-employed, and for the year ended 5th April 2024, his trading profit was 11100. This will be his net income. Martin made a gifted donation 800 gross to a national charity. It means adjusted net income 11100 minus the gross PPC, gross gifted donation. Let's see what I'm getting. Obviously, it is 1,10,300. It is more than 100,000. Since it is more than 100,000, so entire personal allowance will not be available. It will be reduced. Personal allowance is 12,570 less adjusted net income is 1,10,300 minus 100,000 and simply 1 upon 2. So let's see. 5,150. So 1257. So personal allowance available is 7,420. Personal allowance that would be available to Martin, that is 7,420. Okay, now. What is the maximum amount of group relief which Shallow Limited can claim from Hello Limited in respect of the trading loss 1,80,000 for the year ended 31st March 2024? Okay. What is the maximum amount? Let's see. For the year ended 31st March 2024, Hello Limited, trading loss is 180, and this is the year end. Hello Limited has owned 100% of ordinary share capital of Shallow Limited since it began trading 1st July 2024. Number one, the relationship between Hello and Shallow Limited is they are making a 75% loss relief group. Under 75% loss relief group, trading losses obviously can be transferred. It's not only the trading losses. You can even transfer unutilized property losses. You can even transfer unutilized qualifying charitable donation. But the main point is you can transfer your losses to the other 75% group loss relief group member on the basis of common period. So we have to transfer loss according to the common period, matching period. Let's see. So right now there's a trading loss of 180 and Shallow Limited will make a trading profit of 2,24,000. So we can transfer, there's no other taxable profit. So we can transfer the losses, but on the basis of common period, matching period. Let's see. And they are asking what maximum amount we can transfer. So the year end for Hello Limited is 31st March 2024. It means the accounting period for this is 1st April, starts from 1st April 2023, ends on 31st March 2024. Okay. But when it comes to Shallow Limited, their accounting period is a bit different. They were started from 1st July 2023, ends on 30th June 2024. So look at the time period. So common period between these two accounting periods, the common period is 9 months. Basically from 1st July 23 till March 24. So the common period is 9 months. Okay. The amount of the loss is 180. 9 by 12. The maximum loss can be transferred. It is lower of loss according to the common period. And we have to also check shallow limited profit according to the common period, which is 224. 9 by 12. 224, 9 by 12. 2,24,000, 9 by 12. I'm getting 1,68,000, whichever is lower. The maximum loss can be transferred lower of 1,35,000 and 168. So obviously the lower amount is 135. So number one, the loss can be transferred according to the common period basis. And second, it will be transferred maximum. The maximum loss can be transferred lower of these two amounts. For example, assuming Shallow Limited had a profit of 1,50,000. I'm just assuming instead of 224, if Shallow had a profit of 150, which means that 1,59,000 upon 12, you will get 1,12,500. In that case, instead of 135, the maximum loss which we would have transferred, it would have been 1,12,500. So number one is, students, you have to see the common period, and second, after that, the loss, maximum loss which can be transferred, it is lower off. So in our question, obviously, it is 1,35,000. I've also explained what if the profit was lower. So the answer is 1,35,000. So the maximum loss can be transferred on the basis of common period is lower of two values, and that is 135. Okay, now. How will Sizable Limited pay its corporation tax liability for the year ended 31st March 2024? If your company is not a large company, then corporation tax is paid on 9 months and 1 day after the end of chargeable accounting period. Repeat. If your company is not a large company means having augmented profit less than 1.5 million. And we know that the augmented profit limit, which is 1.5 million, it is a portion if your chargeable accounting period is less than 12 months. It is also a portion if you have associated companies. Let's say if company is not a large company, then there will be a single payment, and that single payment will be 9 months and 1 day after the end of chargeable accounting period. But if your company is a large company, then you have to pay corporation tax in 4 equal installments. For the year ended 31st March 2023, Sizable Limited had taxable total profit 8,20,000. And for the year ended 31st March 2024, it had a taxable profit 9,70,000. The profit accrue evenly throughout the year. Sizable Limited has had one associated company for many years. It means altogether there are two organizations. Then augmented profit limit for a large company becomes 7,50,000. So basically, now augmented profit limit is not 1.5 million. Now the augmented profit limit is 7,50,000. If 750 is exceeded, then it is a large company. And obviously, if it is a large company, you have to pay tax on 4 equal installments. And look at this. For the year ended March 31st March 23, Sizable Limited had taxable total profit 820. It means it is not a large only on 31st March 2024. This company was a large in the previous year as well. So how will we pay the tax? We will be paying the tax according to the 4 equal installments. Very simple. 9,70,000 into 25% divided by 4. 60,625. 4 installment of 60,625. Now, how much interest will Lateness Limited will be charged by HMRC in respect of the late payment of its corporation tax liability for the year ended 31st December 2023? Basically, the interest rate is 6.5% in Finance Act 2023 if you are making late payment. For the year ended 31st March 2023, Lateness Limited had corporation tax liability 60,000, which it did not pay until 31st March 2025. Little Limited is not a large company. See, if you are not a large company, it means year ended December 23 means you should have paid on 1st October 2024. So instead of paying on 1st October 2024, you're paying corporation tax on 31st March 2025. So there's a delay of 6 months. So obviously 6 months interest will be paid. Since you are not a large company, you are supposed to pay your corporation tax liability on 9 months and 1 day after the end of your accounting period. But you are 6 months late. So you have to pay interest of the 6 months. And the interest rate in Finance Act 2023 is 6.5% for late payment. 6 upon 12, I'm getting 1950. What is LA's chargeable gain in respect of the disposal of antique table? Okay. Antique table, non-wasting chattels. On 26 November 2023, LA sold an antique table for 8,700. The antique table had been purchased for less than 6,000. So basically, we have to use the special 6,000 rule, and you have to use a formula that is gross sale proceed minus 6,000 into 5 upon 3. You will get a chargeable gain. And then you will also calculate a normal gain. So whichever is lower will be your answer. So gross sale proceed minus 6,000. Why we are using this formula? Because you bought it for less than, you bought it non-vesting chattel for less than 6 and you have sold it more than 6. I'm getting 4,300. So the maximum gain could be 4,500 or less than that, but it cannot exceed 4,500. So let's go for a normal calculation. Sale proceed 8,700, cost 3,800. I'm getting 4,900. So obviously whichever is lower. What amount of lifetime inheritance tax would have been payable in respect of Jane's gift to the trust? Always remember one point, during the lifetime, if donor pays IHT, it is 25%. When donee pays, it is 20%. On 14 November 2023, Jenny made a cash gift to trust 800,000. After deducting all available exemptions, okay, fine. Jane paid IHT, means 25%. Arising from this gift, Jane has not made any other lifetime gift. It means this is the first gift. It means entire nil net band is available. So simply 800,000 entire nil net band 3,25,000 is available because this is the first gift. So I'm getting a taxable amount 4,75,000 multiplied by 25% because donor is paying. So IHT payable is 1,18,750. 1,18,750. Okay, now. During the tax year 23-24, Mild Red made 4 cash gifts to her grandchildren. For each of the gifts listed below, click the box to indicate whether the gift will be exempt or not from IHT under the small gift exemption. Basically, under the small gift exemption, the limit is 250. So make sure the total value of gift to one individual should not exceed 250. If it exceeds 250, then entire amount becomes chargeable. So we need to find out which one is exempt. 400 to Alfred, it's not exempt. 140 to mine. Look at this. Mini. Look at this. 140 would have been exempt, but what happened? They have made 280 further. So not exempt, not exempt. 175 to Winford. Yes, it is exempt. So 175. 175 to Winfried is exempt. Other gifts are simply not exempt. These are not exempt. And this is only exempt. Not exempt, not exempt. 140 is obviously not exempt because of the 280. And 280 itself is not exempt because it is more than 250. An examiner has categorically asked us a small gift exemption. And the limit is 250 per individual in a tax year. Okay, now. How much VAT will ZIM have to pay to HMRC for the quarter ended March 2024? Okay. For the quarter ended 31st March 2024, ZIM had a standard rated sale 49,750, standard rated expenses 22,750. Both figures are exclusive of VAT, means they do not have the impact of VAT. ZIM uses flat rate scheme. Actually, what happens in flat rate scheme? You have to take all the taxable supplies inclusive of VAT. You have to just add the VAT impact into that, even they are exempt supplies. So you have to calculate, number one, all the taxable supplies with VAT and simply multiply by the flat rate, which will be given to you. Whatever comes, that will be VAT payable. ZIM uses flat rate scheme to calculate the amount of VAT payable with the relevant scheme percentage is 12%. The percentage reduction for the first year of VAT registration is not available. So simply, what are we going to do? 49,750. We have to include standard rated VAT 20%. Just simply multiply this 49,750 with 1.2. Let's see what are we getting. 49,750 multiplied by 1.2. So exclusive of VAT is 49,750. Inclusive of VAT, taxable supplies are 59,700 into 12%. You will get directly VAT payable, which is 7,164. So your VAT payable is 7,164. Okay. Which two of the following assets will always be exempt from capital gain? A car, suitable car is always exempt, no doubt about it. UK government securities is always exempt. What is the maximum possible amount which Winston can invest into stocks and shares? In individual saving account, the limit is 20,000. Either it is up to you what percentage of ISA you are keeping in cash and what percentage of ISA you're keeping in shares. But the limit is 20,000. Winston has already invested 8,000 into cash, individual saving account during the next year. So it means 20 minus 8. So maximum Winston can invest in shares in ISA, that is 12,000. Okay, Ming is self-employed for each of the types of records listed below. Click in the box to indicate the date until which Ming must retain the records used in preparing her self-assessment tax return for the tax year 2023-24. Number one, either they are business records or they are non-business records, you will have to keep them for 5 years. But 5 years are countable from 31st January from the filing date. And let me tell you, the filing date for the tax year 23-24 is 31st January 2026. And from the filing date, you will have to keep all the records, business and non-business records for next 5 years. but from the filing date. And the filing date for the tax year 23-24 is 31st January 2026. So you have to keep the records for 5 years and you have to count those 5 years from this date, 31st January 2026. Now, if you count the 5 years, so you will reach on 31st January 31. So for business and for non-business records, you have to retain them for 31st January 2031. And these are the 5 years from 31st January filing date. And for the tax year 23-24, the filing date is 31st January 2026. Okay. How much Moon Limited trading loss for the year ended 31st December 2023 can be relieved against its total profit of 96,000 for the year ended 31st August 2022? Obviously, there's a rule that if you want to carry back your losses, in case of corporation tax, obviously you can carry back the losses for 12 months. Number one. Number two, first you have to utilize the loss against current year total profit, then you can carry back. But if you don't have any current year total profit, then obviously you can go for carry back. And how many months you can carry back? 12 months. So we have a year end, December 23. Amount of the loss is 1,05,000. Then we have a 4 months period end, which is ending on 31st December 22. And it is 43,000. Then we have year end, 31st August 22. Amount is 96,000. So obviously you cannot go directly to the year end 31st August 22. Available loss is 1,05,000. Since we do not have any total profit in the current year, that is why we can carry back the loss, and maximum loss which we can carry back is 12 months. First, I'll be using the loss against period ended December 2022, which is 4 months. It means we are 4 months back. Additional, we can go 8 months back. So previous period is of 12 months, but we cannot go 12 months back. We can maximum go 8 months back, which means that 96,000 is representing a 12 months profit. Make it 12. I'm getting 64. So the maximum loss which I can set off against 31st August 2024, it is 64. But before deducting 64, we need to check how much loss is available with us. Because initially we had 1,05,000. Out of that 1,05,000, you have already utilized 43. So 1,05,000 minus 43. So available is 62. So it means now instead of 64, the maximum loss which I can utilize against 31st August 2022 is 62,000. Why? Because out of 105, we have already utilized 43. And you have to utilize 43 first, and then only you can go for additional 8 months back. So the answer is 62. Okay, now. Nigel has not previously been resident in the UK. So not resident previously in the UK. Being in the UK for less than 20 days each tax year. Fine. For the tax year 23-24, he has 3 ties with the UK. So in the tax year 23-24, he has already met how many ties? 3 ties. Remember this, okay? What is the maximum number of days which Nigel could spend in the UK during the tax year 23-24 without being treated as resident in the UK for that year? Students, first you need to understand the question. Nigel was not a UK resident previously, number one. Number two, in the current tax year, which is 23-24, Nigel has already met 3 ties. Now, examiner is asking how many maximum days? How many maximum days Nigel can spend in UK without being treated as UK resident? So let me, why the answer is A? Let me explain this. Come here. Look at this. Not UK resident any of the previous 3 tax years. Nigel is here. Nigel has already made 3 ties. Now listen. If Nigel lives in UK from 91 to 120 days, then Nigel will be treated as a UK resident. But examiner has asked us how many days Nigel should spend that Nigel should not be treated as a UK resident. So it means instead of 91, if Nigel lives only 90 days, then Nigel will not be a UK resident in the current tax year. Repeat, Nigel has already met 3 ties. If someone who is not a UK resident previously and has met 3 ties wants to become a UK resident, then that person will have to spend at least 91 days in the UK in the current tax year. Then that person becomes UK resident. Examiner has asked us how many days Nigel should spend so that Nigel should not be treated as a UK resident. Then instead of 91, if Nigel spends 90 days and meeting 3 ties, so Nigel will not be treated as a UK resident. So the answer is 90 days, A, part A. So students, I really hope that this specimen discussion of section A will help you. And let me just quickly end up this session by just giving you one 30 seconds information. What is that? If you really want to revise entire taxation, I would say within 9 to 10 hours. So you can contact us. We have a smart revision of tax in which within 9 to 10 hours, you can revise the entire taxation, means entire taxation. You can, if you are outside Pakistan, you can contact us 009233226666. Just a minute. 3666214. This is ASA admin number. If you are within Pakistan, then it is for you 033336666214. So you can just message us. Admin is going to contact you automatically if you want to revise the entire taxation within 9 to 10 hours. So this smart crash course is for you. Thank you very much. Have a nice life.